Hey everyone, it's Al Baroa with Financial Intelligence Training. It's Friday, it's June 15th, and it's 2018. We are halfway through the month of June already and almost halfway through the year. It's amazing how quickly time races by. Now, speaking of race, why not take a peek at the chart when you can? Symbol RACE. That's Ferrari. Beautiful cars and an equally good-looking chart. Now look at the classic pullback on May 29th of the 50-day moving average. I got to admit, I was a little bit nervous on that above average volume of 838,000 shares, but it had a hard break right at the 50-day moving average with an immediate turnaround that was reminiscent to one of their track pit stops. Now the prancing horses are sprinting faster than Justify at the Belmont, with above average volume hitting new highs. That is what I call a great looking chart. Now, before I dive into a few things I feel are noteworthy, I'd like to give a special thank you to all those that attended the webinar yesterday and the kind feedback that we received. Happy it was well received. Great turnout, by the way. I saw that our attendees came from all over the world, including the UAE, and a special hello from Madrid. Now, speaking of Madrid, big game today for the Spaniards as they face off with their Iberian Peninsula neighbor, Portugal, in the World Cup. Now, if you think about it, that's kind of a variation of El Clasico, slightly. Now, you soccer fans will know exactly what I mean. So let's chat the rest of the market. The divergence between the bigs and the betas continues, right? Techs are just steamrolling ahead, but the Dow continues to lag behind. So in our webinar yesterday, I covered this as a classic example of diversification. Since the January high, the Russell 2000 is plus 4%, yet the Dow remains in the red by roughly 5%. So here you see the supporting arguments of why diversification is prudent, and it is. I will, however, highlight that the expectation of diversification as a risk mitigation function may significantly fail you when you need it the most. So to help highlight this point, I'm going to suggest that you go back and you look at the initial drop in this recent pocket of volatility and take special note that in the first move down, the Russell and the Dow fell almost identical amounts, approximately 9 and 10% respectively. Now, financial intelligence training students will understand why I feel this is extremely important to be aware of and what you may do to potentially counter the negative effects of correlation. Now, diving deeper into the current divergence, I'm going to explore the Dow components. Of the 30 names, 19 are currently living north of their 50-day moving average. That sounds good. But even with current price action above the important moving average, some of those chart patterns still look weak at best. Now, to explain this, pull up a chart of Microsoft, MSFT, and then take a look at a chart of Procter & Gamble, PG. You'll notice that both are above their 50-day moving average, but there is no comparison between the two. Now, if you run this exercise through all 30 of the Dow components, you'll see that only a few of the names look like Microsoft. That explains the divergence, but further highlights the fragile undertone. By weighted average, the Dow is being lifted, better said, supported by a few names. If they get tired, who's going to tend to the shop? Right? The financials continue to disappoint as well, so I suggest you continue to monitor the sector carefully. They are key pieces to the market's health. Now remember, if you're thinking about trading, stocks and stock options involves a substantial degree of risk. It's not suitable for all investors, and if you're like me and you like watching charts, well, past performance is not necessarily indicative of future results. Let me end today's post with a warm wish to all the dads out there. Enjoy your Father's Day however you choose to spend it. I'm Al Baroa for Financial Intelligence Training. Thanks for watching, everyone. Have a great weekend.